Hey everybody, it's Sunday. 2 more days. I feel like the guy in the Green Mile. I'm tired, boss, because this election stuff is very tiring. I can't wait for it to be over. Hopefully, Tuesday night or Wednesday morning. Anyway, let's get into the story today. It's about a whole bunch of new paradigms in investing that somehow the questions landed in that area. And we'll talk about cycles. What will pump first, what will pump second, etc. We'll compare historic cycles to where I believe we could go this time, what the end of the cycle looks like, what the end of cycle strategies look like, talk about staking rewards, GDP surges, L2s, new tokenomics for some assets too, new retirement portfolio as well, and a whole bunch more. Let's get into it. This is called a new paradigm, ladies and gentlemen. Thank you as well to Andy and Investing KO, Sir Winston, TND Tesla, Sean Donnelly, K8, and everybody else for being here. Happy Sunday, everybody. And this is not financial advice, just a guy on the internet, as you know, and all the questions come from Patreon. Big shout out to everybody on Patreon. Let's get into it. First of all, first question, kind of coincidentally, Willie T, could we get a fireside chat before the election on what strategy could be with either candidate winning and what you're seeing the result be and so on. Can't remember when our last one was. Really love them and value them. Cool. Well, we typically have one every month. And we did the little poll a couple of days ago, and a resounding 99.1% of people said absolutely they want a fireside chat. So that's happening tomorrow at 10 a.m. Pacific, which is, ignore that date there. That should be November 4, not 11. And it's going to be 10 a.m. Pacific. I don't know how 11 jumped in there. Weird. Again, we're tired. So that's the first question. Yes, fireside tomorrow in about 22 hours. I look forward to it. And by the way, I've actually aggregated all the questions that are top of mind, so we'll cover those too. Next question. That was a quick one. The first time JFJRH has posted. Welcome to the family. So I recall a prediction made 8 months ago that suggested this year's Bitcoin peak would resemble the 2019 bull trap with a pullback in the summer. According to the prediction, the true bull cycle is expected to begin this month, aiming for price over 150K by the end of 2025 and up to 1 million between 2029 and 2032. And the forecast also states that Bitcoin's cycle pattern may end around 2026 due to increased adoption by large companies, aka treasuries. What are your thoughts on this Bitcoin cycle potentially ending 2025 to 2026, and whether this year's Bitcoin performance mirrors 2019? There's a lot there to unpack and a lot of stuff that I think about quite often. But let's first of all talk about, cycles, how they end, and what we come up with. So first of all, why this time is so different to 2019. On the cusp of 2019, we're on the cusp of a big financial crisis, but that was replaced with a pandemic. It's amazing how sometimes things happen. Anyhow, the comparison, I don't believe there's much we can find that is similar to 2019, but this is the truth that I see. First of all, unlike 2019, we're seeing unprecedented institutional adoption of Bitcoin, particularly with the launch of the Bitcoin ETFs. It is bonkers how much they are buying. Remember, it's a much bigger asset class as well to 2019. It is a lot, like 7, 8 times larger, 9 times larger. You could have even 10 times larger. So it takes a lot more money to move it. Therefore, the ETFs are coming at a good time. Second, treasuries. Treasuries are here. We have Michael Saylor coming out this week saying he's going to buy $42 billion worth of Bitcoin. $42 billion. That is monstrous. That's double what BlackRock have bought so far. And all the others too. And also the macro is far worse. So the current economic landscape, including, debt, risks, recessions, etc., economies in turmoil, it's way, way worse. And that is actually favorable for Bitcoin, in my opinion. But the macro is bad in 2019. It's far worse right now, if you ask me. And finally, the market's more mature. Therefore, cycles will not be as volatile as they were in the past. So they're my thoughts. In addition, just a view of some of the stuff that you mentioned. Analysts are calling for some very big numbers. Also, they're calling for year-end 2025 peak, some into 2026, many at $200,000 target, some at $320,000, and some see the cycle going long as well. But my view of the world is always a little more sandbagged, a little more based, as they say. So this is my theory this time around. First of all, I think the analysts are overly bullish, which is normally the situation. Don't believe what you hear on the street. Also, we've seen a lot of this happen already. Every time we hit a new all-time high, the long-term holders sometimes sell, and that's because of lifestyle chips. You know, we got within $220 of the all-time high a week ago, and then immediately it sold off. So we went from 73,600 approximately, and right now we're at 68,640. So that's a, 5K drop in a very short window of time. So there are people that do sell. They're taking, if they have a very low cost base, like $10 or $100 or $1,000, they say, you know what, I'm going to buy that ranch, I'm going to buy that farm, I'm going to buy that yacht, whatever. And also, I do believe the cycle will end earlier, perhaps as early as August 2025. That's kind of like my line in the sand. We may not even get that far, to be honest. It could end in June, April, May. I don't know, because everything this time around is happening earlier and faster. However, this is the good news. The drawdown will be less because we do have the perpetual bids from the ETFs, which are making allocations happen from retirement accounts that basically pump money into the system every 2 weeks. We have the perpetual bid from MicroStrategy, $42 billion. By the way, MicroStrategy have bought every single quarter since Q3 2020. Every single quarter. They've never not bought. So every single quarter you can depend on Michael Saylor buying Bitcoin, no matter what the price. As he says, he'll always be buying at the top. So that's kind of my view of what's going to happen. We'll see how high we get. Did I share my number? Again, I think we'll get to maybe 120K. We could go to 150. If so, that's great. But you never go broke taking profits along the way. Next question, which ties into this as well from Git. Since we are 50% way through the bull market, it's a good time to start thinking about preparing for the end of the cycle. Many people have talked about buying a put option as a great hedge. Would you mind doing a deep dive on that? Maybe you can walk us through a hypothetical example of all steps of the put option from the beginning to the end. So first of all, I rarely buy puts because they're expensive. Very, very expensive. Consider it insurance. Insurance typically is expensive. And I walk through all of the hedging strategies that we could deploy when we get to the top. But let's talk about, should we start thinking about preparing for the top? Well, it's all I've been doing since 2022 and investing with the development team as well to make sure that we are prepared. Also, it's a big reason why I got into MicroStrategy. It's been the whole part of the focus to ensure that we take profits. We built out the top and bottom indicator model. We built out the Lilo model. We've built out the profit-taking model. And soon we'll be deploying the rotation model. All of these will help us. And the hedging options, there are many. And when we get close to the time, you will see the menu of methods. But many of them depend on things like volatility and levels and how high we are and where other assets are too. So it's very hard to put a finger on it right now when we are 8, 9, 10 months away from the top, maybe less, maybe more, but we'll know when we get there. And that is what we've spent a great deal of time and money making sure we do not miss the top. So thank you, Git, for the question. Next question. This is from Alex QF. Hi, team. Thanks for putting all this together. Market analysis, tools, etc. Life-changing and the best community ever. Well, thank you for being part of it. Quick question. What would be the order in terms of cashing out of our crypto investments this cycle's probability end of 2025? First, Bitcoin, then alts, and at last memes. Thanks in advance. I must say, I'm so proud of everybody asking the proper questions because the number one step in investing is having a plan. Number two is sticking to it. So you're really thinking the right way. You're not waiting just like riding blindly on a wave and hoping you don't crash onto the beach and dislocate your shoulder or something like that. This is so important. So let's talk about the past first, and I'll talk about kind of my view of what could happen this time around. First of all, in the historic sequence, Bitcoin sold off first, large cap altcoins second, mid cap altcoins third, small cap altcoins fourth, and then meme coins last, which is very unusual. And it did in historical cycles, it happened. But again, this time, the market is more mature. People are now sniffing out the scam coins. That's why you see Bitcoin dominance doing so well. Because everybody realized, okay, 99.5% of all crypto is garbage. Therefore, I need to be in the top 0.5% of crypto. Now, let's go to an old analog too, which I found very interesting, which incidentally I used today and we'll talk about twice today. This is XRP. Now, if we go back to 2017, 2018, this is from the actual ATR model. The red shadow highlights exactly when the bear market began for each cycle. You can see there's two here on this chart. But what's super interesting is XRP kind of did nothing through the whole bull market. And then it spiked from like 25 cents straight up to $3.60. But what's also interesting, it did it in the red shadow. So it did it in the bear market, technically. So Bitcoin had already sold off, and then XRP went on a rampage. This kind of plays into the view here that large cap altcoins second, or mid cap, whatever it was back then. I have no idea. I don't look at XRP that much. But the other thing that you notice too is it did spike before the bear market last time around too, and that would have been in 2021. But that was also a very manipulated cycle. And I want to talk about manipulation because when you look at 2017, look what happened. 20 cents to $3.60, and then immediate sell-off. That tells me somebody manipulated the cycle, because things like that don't just go straight up without some additional gasoline added to the flame. So, but the other thing to note as well is the thing is just down only because the tokenomics suck. We'll talk more about tokenomics later. So my thought on what could happen this cycle is Bitcoin first, meme second, winning alts third, and the rest will not even pop. The rest will stay dead as they have done so far. And I've got this other tool that analyzes, it's actually how the ATR model came about. It was originally identified to identify zombie coins. And if you are more than 60% away from all-time high, more than halfway through the bull market, you're never going to make it to an all-time high again. So if you're hanging on to those dead coins and you want to get out of what you paid into them at, you're never going to get out. Okay, you're stuck. You're trapped. It's time to pull that trigger and get out of the dead stuff. Follow the data, ladies and gentlemen. All this channel is about data. So that's kind of my thought. For those who are waiting for their dead coins from a previous era to pop, it's not going to happen if they're over 60% away from their previous all-time highs. And that's just the scientific reality. There might be an outlier somewhere along the way that could do it, but the majority, we're talking 90%, 95%, will never come back to life again. So, burst a bunch of dreams, and this chart tells you exactly that as well. And that's my estimate this time around, so hope that helps. Next question is from Cornhead. I have more than quadrupled my MicroStrategy investment. Thank you so much. And been wondering about the best strategy moving forward since MicroStrategy is running so hard. And since my cost basis is quite low, $50, should I just hodl my entire bag since MicroStrategy is running and defer taking initial investment off the table? Or should I use the profit-taking model to take my initial investment and be satisfied with the decreased number of shares? Not financial advice. And if I should take the initial investment out, how do I adjust the profit-taking model settings to only take out my initial investment and taxes and let the rest ride? My coworker thinks I should just hodl because of my low-cost basis. What do you think? So this is such a cool question. And again, we spent a lot of time optimizing exactly for this scenario with a model. This is, I configured it exactly for your needs, but a little bit of a tiny bit of conservative setting. I put in your cost basis and I chose layer 6 onwards to start taking profit. And remember as well, first of all, the lower, this is where your coworker is actually kind of right. The lower your cost basis, the more risk you can tolerate. So let me try and explain what that means for people out there. Imagine Bitcoin is now at, what is it? 69,000. 69,000. Imagine your cost basis is 9,000. You can take on a lot more risk. But if your cost basis is 65,000, you can't. So basically, it defies logic, but the lower your cost basis, the more risk you can assume, and the longer you can stay on the train before taking profit. Okay? The newer you are to an asset with the higher the cost basis, you got to be much more conservative. And that's why my fundamental principle, you've heard 1,000 times, get in early, get in hard. That is absolutely life-changing when it comes to investing. Critical. So that's the key thing. So your coworker is spot on. Buy them a coffee tomorrow if you see them. Now, what I would do here, I'd start at level 6. You would sell 8% of your bag approximately. And remember as well, Bitcoin could rocket post-elections. If history repeats, it could rocket. As I mentioned in yesterday's video, we may never see 70,000 again if history repeats, everybody. When I say that, I'm talking about history. I'm not saying Bitcoin could never fall under 70,000 again after the elections. But if it does repeat the historic cycles, we may never see 70,000 again. But this cycle is different too. Again, it's a bigger asset, it's more mature, but there's more money coming into it as well. And back to this too. Now, if that happens, you probably sometimes have regrets of selling a little bit too early. But remember as well, you only have to sell a small amount to take your chips off the table. Okay? And always, always, always play with the table's money when you can and take initial chips off the table and reallocate a little bit to a less risky asset that has more upside in the future. Okay? Another example of that is NVIDIA and Tesla. NVIDIA went on a complete rampage. It's a $3.5 trillion market cap company now. Is it going to 10 trillion? No. Could it? Yes. But is the probability of Tesla going to $1 trillion and then 3 trillion a lot higher than NVIDIA going to 10 trillion? The answer is yes. Therefore, you reallocate where the upside is greater. And that's part of the reallocation model too. So hope that helps. And again, the idea as well, because like my whole, wrong chart, that chart, my whole thesis for MicroStrategy changed radically this week because of that $42 billion perpetual bid, okay? That my plan was to sell my MicroStrategy. Now that plan is in question. Yes, I'll take some off the table. Yes, I'll reallocate because my bag is already skewed in a violent way. But how much will be a lot less than before my original plan. Again, based on this and based on my expectations. So don't forget to toggle your expectations and your cost base, etc. when you play. And always, it's prudent to take your initial capital off the table because that'll also help you sleep much better. And by the way, this goes to a lot of people. We have over 1,000 millionaires from MicroStrategy alone in the community, and now we have 3 Deca millionaires, 3 people that have made 10 million plus in the community on this asset. When you make that literal, and I say this very clearly, literal life-changing money, do not let life-changing money escape you. Most important thing I'll say today, take enough to guarantee life-changingness. That's not even a word. I don't know. But you know what I mean, okay? Don't get greedy. Don't get greedy. And you will never, ever regret taking profit. Ever. Okay? Even if you get off the train a little bit early, a couple of stops too soon, who cares? You have the life changer because things will always mean revert sometimes, as we've seen too. Thank you so much for the great question. Cornhead. Now we have Thai Stick. I've just heard APY staking rewards with Solana are going to 1.5%. This will really affect my retire on bag. Currently I'm with Helius at 7.98% return. Is this a good thing? And how long will it take to go to 1.5% if true? So I'm glad you're thinking along those lines. And again, this is all about the whole theme of today is how paradigms are shifting, how I always stress tap dancing shoes, how my thesis from MicroStrategy changed this week. Again, always be flexible. But let's talk about staking. And again, the miracle of compounding and why it is so important, but nothing lasts forever. Okay. The other rule of investing, and that's not a paradigm that's changing. That's a paradigm that's always been there. So if you look at the example stake yields for Solana, they do drop over time as inflation also goes down to 1.5% over time too. And that's just the nature of the business. And the math behind what is going to happen to Solana is right now, yeah, you can get your 8%, and the initial inflation rate was set at 8% in January 2021. But this rate decreases by 15% each year, and as such, so will the long-term inflation rate, and as such, so will the staking rate. And that, you're right, it's estimated to reach 1.5% around March 2031. Okay? Now, in terms of a paradigm shift here as well, I have to say this. The world will be radically different 2 to 3 years from now. So it's 2024 now. By 2026, maybe 2027, everything will be different. So for anybody out there that is investing and they think, oh, well, MicroStrategy is going to go up forever and I'm going to get 8% staking rewards on Solana and I'm going to hold Solana forever and that's part of my long-term plan. Don't ever assume that, okay? I build Retire on Bags to give you a plan that you can build to, but always remember to rotate. And once that horse runs out of steam, you get onto another horse, okay? So these things are not there to be there forever. As people say, oh, I'm going to be holding my Solana in 2045 and my Bitcoin in 2052 and all that. These things probably won't exist by then, okay? Never assume anything will exist. Tesla may not exist by then. Everything is changing very fast. So people, we need to be prepared for that. Identify the disruption that's coming. Identify that's going to take us off our existing horses that have served us very well, by the way. And it's sometimes people have a hard time selling, but selling is part of the game, just like this. At a casino, remember, you're at the casino. Do not get married to any one asset. You put your chips on, you move them around, you add the little load, you take some off the table, you put them on another game. That's the game of investing. Never assume anything's going to be there forever. So again, when you put together your retirement plans, think about what the next asset will be. And we monitor things very carefully. And the minute the thesis changes, like my thesis changed on MicroStrategy in a good way to hold longer because of the news this week. But it could have easily gone the other way. Okay, so just bear that in mind as well, everybody. Hope that helps. And the other important thing to mention regarding this, and again, it goes back to the rule I mentioned earlier, get in early, get in hard. The impact of the compounding is most in the early years. If you're buying Solana at $8, and many people in the community bought a big bag at $8, and you're getting 8% on that $8, you're actually getting 8% on nearly $160 asset right now, which is it basically smokes your initial cost basis in just the amount you're getting back in dollar basis as well. So remember that too. Get in early, get in hard, ride the horse till it runs out of steam, and then find the next horse. That's the secret. And never assume, ever assume you're ever going to hold anything out to 2030 or 2031. But the compounding matters early. So hope that helps. It's a fun video, I hope, for everybody. Let me check on the market. 68.6 on Bitcoin, 161 Solana, everything else kind of quiet. We didn't have our typical weekend pump. In fact, it's gone down this weekend, but everybody's in a holding pattern because of Tuesday in the United States. Everybody's looking at it. Nobody's pulling triggers until they're sure what's going to happen. And that's what's happening. So the next question is from the Dutch Solanian. This is interesting. With a name like Solanian, you're interested in a Polygon layer too. So here's going to be some hard-hitting truth from me. Polygon's alter ego, Paul, by the way, it's the new MATIC, is one of the worst performers in the last months. Do you think the change of tokenomics is the reason? Because Polygon had reached a total supply of 10 million. They changed it. Yeah, they changed a bunch of stuff. And greetings to everybody in Holland. So yeah, let's break down exactly what has changed in Polygon. But then we'll get deeper into crypto, layer 2s, and what really matters. Okay, first of all, I do not own any layer 2s. Okay, I have not for many years. I think last time I did have MATIC was like 2021 or whatever. That was the beginning of the profit-taking model. I think I got to the first layer and then the bear market happened. But hey, lessons learned. Very important lesson learned. So, and I've always called them a band-aid on an underlying problem. But don't take my word for it. Enter Justin Bonds, who puts it so well. Shout out to Sanjay as well for sharing this with me at like 3 a.m. this morning. A blockchain is either scaling or it is not. Now, I want everybody to listen very carefully to this. L2 scaling relies on external for-profit companies to solve scalability without changing the underlying blockchain, which is Ethereum. If that does not make sense to you, that is good. It means you are a sensible person. L2 scaling is not scaling at all in the truest sense of the word. All right, we all know what's happening to Ethereum. We all know what the black hole is. And we all know L2s are band-aids. I do not advise anybody holding L2, and I've stuck with that for years now. Okay, years. So a bit of hard love there. Second, they did a switch gears. They changed the name, changed the branding. And sometimes when you have a brand that changes a brand, sometimes it's because they're desperate or they want to play a little game or a little sleight of hand, whatever it is. But these are the updates. First of all, they introduced a new emission rate, and it's going to increase annually for the first 10 years. And half of the newly emitted poll tokens will go to the proof-of-stake staking contracts for validator rewards. And then the supply model, unlike MATIC, which is fixed supply. And by the way, MATIC had a great crypto compendium score back in the day. It was one of the best. That's why I owned it in the last cycle in 2020, 2021, because it had really, really good tokenomics. That's all changed right now, ladies and gentlemen. That's now a different kettle of fish. And the supply model now under MATIC was a fixed supply. Now it's an unlimited supply model, similar to Ethereum. And what else? The inflation is controlled through token burns, which will be a function of how much it's used. All right? So we all know what's happening with layer 2s. Base is doing it all right now. Now, I know there's a thing called Poly Markets, which is doing quite well, but Base is the machine. And then it's Arbitrum, and they are the ones generating all the fees and doing all the action. And then you cannot buy Base, so do not buy a fake Base out there, ladies and gentlemen. But this is what's required to cure the tokenomic problem. And as long as Polygon is able to keep up with their adoption hypothesis, the future looks promising. But if there's no adoption, you're stuffed, okay? It's that simple, ladies and gentlemen. We all know what's happening drastically, very quickly, even way faster than I ever expected years ago, is this puppy. Solana is the black hole that's eating everything. The winner takes most, and that's the way of the universe. This numbers came out just the other day, and if you look at end of October, the month, the amount that this chain is making in their gross domestic product hit an all-time high and also leads all other blockchains combined. It is bonkers what's happening. So if you're pinning your hopes and dreams to a new rebrand of MATIC with a new tokenomic structure, pinning your hopes on adoption for, as Justin would say, in a very eloquent way, far more eloquent than my Band-Aid, yeah, don't. All right? That's why it sucks. That's why all layer 2s suck. Base is making it work, but there's no token. So anyway, hope that helps. Next question. Sometimes I feel I'm spanking the audience, but you can see I'm passionate for a reason. I want people to do well. Okay, next question is from Learning Daily. I've been using ATR, and it might be time to learn one or two additional indicators for further confirmation of trades. What additional indicators might complement ATR? So basically, I love what you're saying, because everybody, the more confluence you have across different models and indicators, the higher your probability of winning. It is absolutely radical and drastic. A simple little chart here. If you have one indicator, you can remove a certain amount of uncertainty. If you have a second one saying the same thing, you move even more uncertainty. And if you have a third one saying the same thing, you remove a huge amount of uncertainty. So it goes from, 70% uncertain to 8% uncertain when you're making your decisions. And this is so important. So the more things you have telling you things are going in the right direction, the higher your probability of winning. Okay. The other thing is, this is all of the stuff we have. There's over 13 different models. The effort for us to set up one account and deploy the indicator for one model versus 13 is not too different. And we've always committed that everybody gets everything for one price. You basically get everything we have and all future models for just $175 a month. But I know it's a lot of money, but there's millions of development fees behind the scenes and a lot of maintenance to keep these things alive and well. So it does cost, but the money you can make from them is far more than that amount. If you're serious about investing and you've got at least $3,000 to $7,000 in the markets, it's definitely worth it. And in answer to your question, if you combine things like ATR with IDSS or the optimized trend or play a little bit with PTOS, you're fine. Like I use PTOS, IDSS for perp trading on Solana. And we had a 10 for 10 winning record until right now. So underwater right now on the 11th perp. But that could be the curse. Remember as well, allocations matter. So you can take one loss or 2 losses every 10 trades and still do incredibly well. In fact, you can even do 6 out of 10, but just try and bake the odds in your favor. And the more confidence you have across indicators, the better you are. So I hope that helps. Next question is, zoom in so I can see. More cowbell. Sounds like Raul Paul out there. Let me begin by saying how much you appreciate. I hate these compliments, but thank you so much. Infinite Alpha. I like that. You've mentioned de-risking your bag and buying assets that generate perpetual income once you've met retirement goals. I'm in my mid-50s, and so am I, and I'm fortunate to have saved enough to retire early. If you were me, how would you structure your retirement portfolio? And FA, of course, my portfolio is 50% mutual funds, 25% crypto, 15% Tesla and Nvidia. That's nice. 10% real estate. Also, what are your thoughts on having a financial advisor manage the mutual funds of that portfolio at an 85 basis point fee? Thank you again, truly. Thank you, more cowbell. This is such an important question. And again, it's going to be more hard-hitting facts coming your way. So let's go. And this also ties back to the story today, is how paradigms are changing so radically right now. First of all, let's talk about the elephant in the room, the compounding effect of fees. And I just use 1% as an example. Oftentimes, if you look at the fees your mutual funds have and your financial advisor has, often it can be 2%. But just for giggles, imagine you invested $10,000 in a mutual fund with a 1% fee, and it grows 7% per year. After 30 years, your bag goes to $32K. It's embarrassing because you could have thrown $2,000 at MicroStrategy in the bottom of the bear and made $1 million. So it is crazy how. This is why I don't believe in ETFs and mutual funds, because they're not. If you're not making 14%, you're not going to get where you need to be. Looks like you've been lucky though. But back to this. After 30 years, 10 grand goes to 32K. And remember, if you take out debasement, you're basically under 10K. So you're not going to make it. You're going to drown. And that's with fees. Without fees, though, it gets a little bit better. That 10 grand goes to 76K. That means that fees have eaten away almost 57% of your potential retirement savings. Okay? 57%. It is drastic. It destroys your compounding. Okay? Not the good compounding, but it eats at the good compounding. So if you're buying mutual funds, which have fees, and then you're adding another 1% fee on top of those fees, you can kiss your ass goodbye. You're not going to make it. Sorry for that. Okay. The other thing, I'll probably have some future financial advisors watching this here. If you have, again, that fee, it's going to eat half your returns. And by the way, some advisors, not all, but some, they recommend funds that they get high commissions on. In fact, you've got many 401ks at companies or pension schemes. They're in bed with companies that shill those funds that they make fees on off your back. And then the people that shill them, like your employer or your financial advisor, gets commissions. And you get stuffed. This is the game. This is the game. Be aware of it. Do not be on the receiving end of it. If you have to buy something like a mutual fund, don't. Or an ETF, don't. But if you have to buy something, just get the S&P 500 at 0.1% fee and let it ride. And that'll outperform 90% of these funds anyway. So bear that in mind. That's the simple math of how this whole game is rigged against the retail investor. It's why I make videos. Also, underperformance, as I mentioned, many actively managed funds underperform the benchmark indexes before fees. Before fees. After fees, you're getting completely stuffed, my friend. And finally, if these so-called financial advisors were good, if they were good at their job, they wouldn't be financial advisors. They'd be managing their own bag. Okay? They'd be rich already. Endless wealth because they're good at their job. Okay? It's all a game. It's all rigged. Sorry if I'm bursting dreams here, but you gotta, especially for the young people watching this stuff, they gotta be aware. All right? Buying mutual funds and paying fees will screw you. Okay? You're not going to make it out of the matrix if you do that. Again, I feel like I'm just spanking people all day long, but hey, a lot of coffee this morning. Now, the other thing, back to paradigms changing as well. This one, I all my life, big believer in real estate. Make money in the market, buy multi-unit properties, has a kind of a nest egg, perpetual income, safety, and stuff like that. But that paradigm has also changed radically right now too. Yes, real estate can still work. Yes, you can write off taxes. It's an inflation hedge and you get your perpetual income. But the headache is not worth it. The property taxes keep going up. The utilities keep on going up. The costs keep on going up. The cost of maintenance people, roofs, windows, concrete, sewer pipe replacements, they've gone up 3x, 10x in the past decade or so. And I know because I've got all the bills and receipts. I've been doing this for nearly 30 years. It is not worth it anymore unless you can buy a really good multi-unit cheap in a place that the population is about to explode and there's no rent control and there's low property taxes. Then you can make it work. If you can't check those boxes, you're not going to make it work. The only people now that can make it work are like the Blackstones of the world that get money from the government for free and then they create renters for life by buying properties. Again, more hardship, more hard truth that everybody here needs to hear. Now, getting back to real estate, how the paradigm has changed, there's no doubt in my mind, Bitcoin will outperform real estate. Zero doubt. Zero doubt. So if you're looking for that investment, the perpetual income, I want you to think about this new paradigm. Again, another new paradigm. Invest in disruptive assets for capital appreciation, okay? With no headache and no management and no fees and no overhead costs, okay? Over your traditional income generating investments. And instead of, you buy Bitcoin or whatever disruptive asset, Tesla, whatever, don't plan on holding it for life, but think of it like a house. And as the price goes up, you take a salami slice off of it to live on, to cover your expenses and overhead. And the way it actually works is, imagine you got the opportunity to buy a car for $100,000. And you calculate, okay, that's like 2 Bitcoin. Am I going to sell my 2 Bitcoin to buy that car now? Or my X number of Tesla shares, 600 Tesla shares or something? No. Because when you're in that structure, when you're not living off traditional, I hope this makes sense because I've never heard anybody talk about this before, traditional perpetual income generating assets, you have disruptive assets that are growing faster than your real estate, and you take a piece off as you need it to live, and that will help you automatically control your burn because you'll see the cost of selling your 2 Bitcoin to buy a car. He's like, you know what? I'm okay driving my 1988 Mazda 323 because it does the job and I can keep my Bitcoin in the market till it hits a certain target. Then you can sell a piece. And same thing for real estate. And the other thing as well, sometimes the tax considerations can be a lot more beneficial for capital gains than they can for rental income or treasury bond income or things like that too. So yes, final point. This is a big one because we are talking about a new paradigm after all. Yes, disruption is riskier, but boy, I forgot to share the slide I shared yesterday in yesterday's video. The returns on disruptive assets, 850% on NVIDIA in a year. Okay. One of the suckiest ones was Tesla, 27%. It was a nasty down year with a massive recession in the automotive industry. And that's not even a car company. But they're on the verge of exponential growth. So watch this space. Watch companies like Tesla over the next 5 years, 6 years. It'll be mind-blowing. Face melting completely. So yes, disruption is riskier. But if you're in the right things, they will absolutely crush your traditional income generating assets. And there's even one more slide. Okay. And then I promise I'll be done with this whole paradigm thing. But de-risking from crypto as well, close to the top of the bull market and into disruption will be the pair trade of the decade, as I've been talking about for a long time. The vast majority of my buys over the last 22 months, if you look at all the money that I've spent in the market in the last 22 months, it's mostly gone into Tesla. Buying heavy at 104, 106, 115, 121, 141, 150, 161. Huge, big allocations and very risky option strategies that have generated tons and tons of money. Rather than buying luxury items or cars or houses, I knew I'd get a lot more return. And I will rotate more into disruption when the time comes, i.e. when we get to close to the top of the crypto bull market, which is the initial questions in this video today. And finally, I've completely given up on buying rental properties. And in fact, my next phase will be to offload them. That's how much the paradigm has changed, ladies and gentlemen. I didn't throw too many cold buckets of water over everybody, but these are just so important. The world is changing so fast, all right? Rapidly changing. You got to be on that wave, and that will be very life-changing. And when you make your life-changing money, lock it in, okay? Don't let it ride. Take it off the table. Thank you so much. And best part of the week, helping animals. Today we donated to the Sloth Institute to help the Care Food and Shelter for the following. This is Taco. It's not even Tuesday. At 6 months, Taco is found abandoned, but she's currently in sloth school. Her picky eating habits posed a challenge, but with time, she was now able to eat a variety of foods. And they're so cute. Who wouldn't want to help this little baby? Anyway, that's Taco. I wonder, does Taco like tacos? And tomorrow is DCA Live. This is the last DCA. Not ever, but before the election. So it's going to be a good one. It's going to be a bonkers show. And Mando is moderating, and Mando's a legend. So thank you all for coming. That was the new paradigm. Now I'm going to do some live questions for everybody and drink some. I don't even have tea today. Back on the water. So I hope nobody got offended. But these are just such important lessons. And remember, tap dancing shoes. Always don't ever assume you're going to be holding any asset for any long period of time. Everything changes week to week. And don't forget, a Fireside tomorrow for Patreon members at 10 a.m. Pacific. Forgot to mention that at the beginning. Andy, thank you in Australia. You're wonderful. Thank you for being here. And thank you for being part of the family. Ron B. Hi, James. I've been following Patreon. And did I hear you right? You're going to stop doing YouTube after the bull run? If so, is there anybody that you thought could take over? I definitely don't want you to go. No, I'm not going to stop, but I am going to scale back. I won't be able to do 7 days a week for years. I've got to stop that because that's just not healthy. But I will be doing 7 days a week through the bull run. And I will be around to see Tesla melt faces. That is my promise. However long that takes, I'll be here. But I don't think I can do the 7 day a week thing. It's just simply way too much. And it puts my whole life on hold. You can't do anything. So hope that helps, Ron B. And hope is not a strategy. Thank you for all the hard work as well. And thank you for being there. I love that name. Hope is not a strategy. It's actually so true. Bon, thank you too. And JKS. You mentioned market makers are suppressing the Bitcoin price even when ETFs are buying 10x of the mine supply. How does this ever change? Why would they stop doing this? So the simple fact of life is money is in the money. The reason money runners like BlackRock make money is because they have access to money. If you have access to money and money flows, there's a million games you can play to make sure you make more. And that's why at BlackRock, they don't mind 0.25% fees on the Bitcoin ETF because they know they can make a lot more on market making. They take in the cash, okay, to buy a share, and then they take their time and how they deploy that to buy Bitcoin. Normally it's T+1, it's supposed to be 1 day, but sometimes, like over a weekend, if they get the cash in on Friday, who knows when they're going to deploy? It could be next Monday. And we've seen that constant pattern where Bitcoin sometimes pumps at the weekend and then falls Monday afternoon. That's probably when they buy. We'll see. And also market makers, the reason they make things like perp so inciting is they love to liquidate people. And they can get people to put all their chips on the table and then just dump on the price. Price goes down, perp gets liquidated, take it back. Or people with stop losses, they can see everything in the market. Like when you place a trade on Coinbase, imagine you're doing a limit order for Bitcoin at a certain amount. They see all that. By the way, Sunday pump is beginning to happen. Thank goodness. Ooh, this time is a little bit different. So, but we're still under for the weekend. We'll come back. But when will it change? So right now, the ETFs, they have access to OTC desks. I covered that on Tuesday, I think, in Okta, if I'm not mistaken, and how the OTC desks are rapidly being depleted. When that happens, and if the long-term holders stop taking profits, which they haven't been doing too much of, most of the sellers are gone now, we should go up. So they can only keep a lid on price for a certain amount of time, and then it gets expunged, and then we go to the moon, and that's the next phase. So we'll see. But that will always happen. That's, anybody who is on the receiving end of money will find a way to rig the game to their advantage. And it's the other problem is money perverses people, which is a disease. That's why I always urge people, please don't ever care about money. The minute you don't care about money and have no emotional attachment to it, the better you all are. And then you do much better. Charles Kincannon. Your pros and cons of SpaceX. Noticed you did not. So SpaceX, Helius Bonkers says, the pros, they have a platform that can give the world global internet, and they can turn on global cellular communications as well. That will disrupt, I don't know how many hundreds of billions of dollars of telco assets. So again, Elon will become even more disliked by people because, again, he's going to threaten that industry. Also, you've got military. Military now need reliable comms. The only way they can get that now is satellite, and the best, fastest, most secure is SpaceX. So I've heard that the DoD has a deal with SpaceX for comms. SpaceX is actually being used in the Ukraine right now. People say, oh, a certain guy, Elon, is tight with Putin. If that was the case, he wouldn't be giving the Ukrainian army communications. Okay, so that's just the type of crap you read in newspapers. Just all lies. Everything in newspapers and TV is a lie. That's the other thing as well. Paradigm shift. There's a new source of truth out there. You guys know what it is. So the bad thing about SpaceX, in my opinion, is the plan to go to Mars. That's going to be costly. But we don't know. Well, actually, some people do know there are things on the surface of Mars that could be very valuable to Earth too, precious earths and other things. So even though it'll cost to get there, Elon Musk has found a way to put a kilo of material into space for $10, so that it's all of a sudden it's not as costly as it used to be. And if they get there and bring stuff back with the rockets, it could be quite impressive too. I don't know if the rockets actually stay there or if they fly back. I don't know. We'll see. But that would be the con. But if you run global internet for the planet and global cellular communications, you can afford to do many, many, many missions to Mars. So that's my thought. We'll see. Charles, thank you for the question. And Doc Simple, If MicroStrategy drops to 200, would you consider buying a call for 2026? Yes, I would. 207 is the magic number, actually. I'd be considering that. I don't know if it'll drop there. It did fall to 207 briefly for like a millisecond on the earnings call last Wednesday when people heard $42 billion ATM. Everybody's like, no, massive delusion. But they don't understand what this guy does with it. Anyway, thank you as well for your super stickers. Sir Winston, Investing KO, Tesla Roo, Adam Q, Doc Intern, JD, Forrest M, Dog1, Signal 103, Radrich, and Joe the Hun. And I was a bit frightened about making this video today because it had so many buckets of cold water. But you have to know they're important. Sometimes to get a bucket of cold water thrown on you too. The paradigms are all changing. Thanks, everybody. Thanks to mods in chat too. Have a good night.